Hello, everyone. This is Mohammad Akif with Akif CPA, and today we are here to discuss how the IRS look at your tax deductions. How do they evaluate when it comes to tax deductions for content creators? This is very important because nowadays there is a rise in audits for self-employed people, which includes the content creators, and then this is coming more and more. Where what is so what we are discussing today is that what the IRS is looking for uh, in terms of documentation, in terms of the way the expenses are being spent in deductions. What are they looking for? What is the question they're asking? And then what kind of information they're looking for. So this video focuses on the content creators, influencers, streamers, YouTubers, you name it, vloggers, bloggers, podcasters, in terms of how, when you are deducting something, how the IRS is looking at it, what exactly are they looking for when it comes to audit, and then to make sure that you understand all this before you claim a deduction, right? So again, how the IRS is evaluating your tax deductions when it comes to your business as a content creator. So before we get into it, I want to make sure that I do want to point out that a lot of the content creators or a social media person that we get as a client, one of the biggest problems that I've seen over the years is that there's a lack of bookkeeping. There's a lack of accounting being done. I mean, the majority of them are running. Of course, they're busy running their own business. They are running behind on accounting. They are running behind on bookkeeping. And what this does, it puts them back in terms of financial matters, in terms of tax planning, in terms of, excuse me, tax savings. And then accounting and bookkeeping is the key to get to that point. It's not just about making the most money, meaning that trying to bring in the revenue. It's also about keeping the most money. And the only way you can do this is if you have proper accounting, with timely proper accounting, which gives you financial data to make choices, to make decisions for yourself. That could be to how to maximize deductions, when to buy equipment, when to buy vehicle, retirement accounts, you name it. Everything is linked with proper accounting, which gives you the financial data. So again, in order to get the data, in order to do the planning, in order to save taxes, you must have proper bookkeeping and accounting. If you don't have that, you will be always behind. You will end up paying more taxes than you're supposed to pay, or than you should be paying. Because what it is it's not about paying the maximum, right? I mean, a lot of people they tend to put this on the back burner, but this should be the forefront. You have worked hard to bring in that revenue. So make sure that that's only half the step. Now you gotta work hard to keep most of the money. So make sure you have proper accounting. If you have any questions, of course, you can reach out to us, info@akifcpa.com. Again, info@akifcpa.com, and we can help you with bookkeeping, accounting, tax, setting up the business. So we can do all that for you. Just reach out to us, info@akifcpa.com. All right. So and without any further ado, let's get into it. So, what is the IRS looking? Let me share my screen with you guys, so we are all on the same page. All right. What happened to the other one? All right. Let's dive into it. Number one, ordinary and necessary expenses. So what happens? I mean, so the key question, the IRS question is are the claim expenses ordinary, meaning common in your industry, and necessary? So are they ordinary and necessary? That could, let's say, for example, in case of a social media or content creation online business, I mean, cameras, lighting, equipment, editing software for YouTubers. This is something that is ordinary part of the business. Of course, this will be deductible. But let's say, for example, personal vacations. I mean, I've seen this a lot, quite a bit. Spending money on clothing. That's another one, right? These are all deductions that you cannot claim. Personal clothing. I'm not talking about business clothing. We have a separate video for that. How can you make sure that you can deduct clothing for your business? And then, so what the IRS is looking for, that it must be relevant. It must be relevant to your niche, the area that you're working in, tied to income producing activities. Meaning, the whole point of that is the intent. Are you working? Are you pushing to make money? Are you pushing to lose money? That's the key here, right? I mean, so nobody wants to lose money, of course. The intent, and it's you're trying to produce income, right? So this is, and then it is necessary in that production of the income. Your expense is necessary. And how do you get that done? Is through documentation. Make sure you have proper documentation if something is out of the ordinary or not necessary. And that's number one. Let's go to number two. Number two is direct business use and personal use allocation. So again, equipment that is bought, phone, for example, phone in your case, a phone would be a good example, right? I mean, so you use a phone to shoot some videos. At the same time, you're using your phone for a personal reason too. You're calling your family, you're calling your friends. So there's a mixed business and personal, activities are happening within that phone. So how do you deduct that, right? How do you say that, okay, 80% is deductible, 60% deductible? How do you do this? I mean, this is all based on your, usage, what exactly you're using for, and then, again, logs, usage reports. This is what strengthens your claim. You gotta know in terms of usage what exactly we're using. In some cases, I've seen 100% deduction, 100% vehicle deduction, 100% this deduction. This is a no-no, because too, right? This is just not true. And when someone is doing 100%, this is bound to get flagged. Number three, documentation received. So what kind of documents do you have, right? That's another key too. It's not about just creating documents or writing notes. So what kind of documents you have, and then so how do we know what documents are solid, meaning that these are something that can be relied on, and then something that are indirect, right? I mean, so that means that they can be relied on in combination of something else. So make sure, like for example, bank statements, credit card statements, right? These are something these are solid proof, because they cannot be altered, they cannot be changed. And then so credit card statements, bank statements are one of the documentation. It's like, again, notes when you go for a meeting or meals, when you're traveling for work. Note, documenting the whole thing. You're making sure you're writing down what was the purpose, what did you talk about, who did you meet, and then how much time did you spend. So this is what the IRS is looking for when it comes to documentation. So once they see this, they do get easy. We had a client who had it was what had vehicles in the content creator business, and then they were using multiple vehicles. But one thing was good with them was they were documenting their travel logs. So they had an app which was documenting every travel, which they were able to say that was business and personal. They were audited, and then because of those logs, they were they came out on top of the audit. All right. Number four is this business that you're claiming to be, is this for product profit or for hobby? I mean, so a lot of hobbies do turn into business, and this is a clear distinction, right? It must be for profit motive. It cannot be hobby. Hobby is something that you're doing less often. I mean, it just once in a while. I mean, so again, and consistent. I mean, the point here is that it is happening, moment after moment, right? I mean, so it is happening on consistent basis, and then occasionally posting will not be considered a business. So this is very, very important, right? Is it a hobby or is it a business? How do you classify this? So they will ask you, I mean, how many times you're posting, what exactly are you doing to grow your business? These are the key questions here, and we're going to make sure that you pay attention to this. So a lot of the idea is, of course, you are starting business, you are starting new. Initially you will be posting, you will try to post, and then the post will go up. But again, there's a whole pattern to it, and then make sure that you are following that. It's not just once in a while or once a month, and the next thing you're claiming a full business deductions. All right. Number five, clear business for purpose. For travel, meals, and entertainment. Entertainment expenses are no longer includable. So these are X. We cannot do that. But we have a separate video for travels, which includes meals, which includes lodging. Did a whole video on it, how a content creator can deduct. And there's a tip at the end, how can you deduct your weekend as a business. So watch out for that video, and also watch till the end, because you will find out how you can deduct your weekend as a business. So again, business purpose for travel. This is I'm just going to do summary here. I mean, of course, this must be for business purposes. You are, this is again, you are planning ahead before you set up meetings before you go, not once you got there. So for example, if you had traveled for leisure purposes and suddenly you find a business, this will not, your leisure travel will not be deductible because the initial intent was leisure. And then so for this to become business, we have to have a lot more documentation where things got standard and why they got standard. It's just too many things that come into play. So make sure you plan ahead, right? Make sure you plan ahead. Again, travel logs, itineraries, meeting notes. These are very important points. Marketing and professional activities. Number six, the key question is, are expenses for marketing and promotional purposes linked to business growth? Right? I mean, so that's the idea here. Are they linked to business growth? So sponsored ads, giveaways, these are big things, right? Are they promoting your brand? Of course, if they are, then are deductible. If there are, unrelated personal gifts or entertainments, are not. So again, just excuse me, personal gift buying for your spouse or your friend or your whoever significant other will not be deductible, and then they need proper documentation for that. So contracts for sponsored giveaways, ad campaigns, documentation. This is what we're doing. This is who somebody won, how many people won. There's a lot of, make sure you're able to keep the documents. All right. So use of business account versus personal account. This is very important, very, very important. And this is where the bookkeeping also comes in. This is where make sure when you set up a business, you have a business account. A lot of people fail to do this, especially when it comes to content creators, because everyone's just starting by themselves. I mean, there's no idea this is going to grow, become something big. They're just trying. But once you have an idea, things are going. Make sure you get an entity. Make sure you have a separate bank account. Make sure you have a separate credit card account for the business. Don't mix personal and business together, especially when it comes to bank accounts, especially when it comes to credit card. I highly recommend that you get a separate business account, that you get a separate business card, because otherwise, this is too much in personal, too much in business together. It's hard to differentiate. And then when you are a content creator and things are going up, you don't have time. You don't have time. And one way that you can help yourself is to have a separate business account and separate credit card account. So this is very important, guys. I mean, make sure that you have separate business and credit card accounts for your bank and credit card accounts for your business. All right. So anything that is large, again, are they for business activities? I know sometimes when you're buying equipment, this when it comes to content creation, a lot of money, it could be 10, 15, 20, 30,000. In that case, make sure it is all for business, right? And then how do you do this? Of course, if you have a business location, where is the business location? If you're paying rent, or how you are setting it up. There are a lot of things that go into it. Make sure that you have, this is you are able to deduct it. Make sure you have documentation. That's what I'm trying to get to here. All right. Proper use of home office deduction. That's another key too. If it's a home office, there are certain rules for it to be considered an home office. You got to have a separate door. The door has to have your the business name on it. Of course, you can deduct uh, home office expenses. If you have a room, you can deduct. So the maximum, based on the square footage of that room versus the whole house. So we do have two different ones, where one is the standard rate, which is a simplified method. You get a percentage, you get an amount based on your square footage, and this other one is an actual expense, which is home office expense, meaning that what you're spending on your mortgage interest. Let's say if you do have it, or your rent, utilities, there's a deduction based on that. So one is a simple method, one is an actual method. Simple method, you just tell the square footage, you get the deduction. If you want an actual method, then of course you got to have the utilities, rent or mortgage, whatever you're paying for that space. Based on that, we can get the deduction. All right. So, and then last but not least, the estimated tax payments, right? So this is compliance. Make sure that you are making, if you are earning, and you also proprietorship, or you are single member LLC, or in any other case, if you have business, even if you're S corp, make sure you're paying estimated taxes beside the other taxes, because the IRS can penalize you heavily. The first year you can be okay, but the second year, this can become a big deal. I mean, the amount, the penalty can get range from 1,000 to 2, 3, 4, 5, 6, depending upon your tax amount that are due. So make sure you are on top of this. And the only way you can be on top of this is through proper accounting and bookkeeping. All right. So that's make sure that you guys you understand this. Proper bookkeeping and accounting is the key to many different areas where you can save taxes. I'm saying it again and again because it is true, and it is the key to everything. All right, so all right, so how do you stay compliant in 2025? Simple, track business, and make sure track business and use. If you are using one account, I mean, this is something, again, I don't want this to happen. Make sure you have separate bank accounts, maintain organized receipts, invoices, logs for deduction. This is very important. Keep separate account, guys. I mean, this is very, very, very key here. Keep separate bank accounts and credit card for businesses. All right, and document, because that's something that can save you later down the road. All right, so with any questions, shoot us an email, info@akifcpa.com, and then we can definitely help you. Again, info@akifcpa.com. Thank you.